Essentially, it's trying to simplify the whole process, really, rather than making, the entry, the management and the exit all very...
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management and profitable psychological triggers. Welcome to the Two Traders Podcast.
All right, welcome back to the Two Traders Podcast. It's Walter, and I'm here with Darren. Hi, Darren.
Hi, Walter.
So, Darren, you have this idea, and I thought brilliant. It was sort of fortuitous because I had just read this book review by one of my favorite authors, and then you had this idea about diving deep into this topic. So would you like to explain to everyone listening exactly what's on your mind?
Yeah, this is Nassim Taleb's new book, Anti-Fragile, I think it's called. But I saw him do a seminar on the internet about the book. And basically, part of the premise is this idea that we're obsessed in the world now with making stuff more complex. And we've kind of got this notion that if we make it more complex, that we are basically improving it. And he's saying, no, actually what you're doing when you make things more complex is you're making them more prone to fail, and you're actually making them more fragile. And he made a really good analogy about a Kindle and a book. And now, everyone wants a Kindle because we think they're so much better than books. But he said, well, you try destroying a book and you try destroying a Kindle and you see which one's most fragile. And they both essentially do the same job. But we, as human beings now, we just seem focused on this idea of the complex thing being better. So we have these Kindles and we think it's great when we go on holiday, and then, you spill your drink on it and it's broken. And, when have you ever broken a book? It's nearly impossible. So he's just kind of, obviously there's much more to this, but for me as a trader, I thought this was fascinating because, how many times have we seen people say, well, the system failed today, perhaps we need to add another moving average, or we need to, only take pin bars. We complicate our systems and how we trade, thinking we're making it better, and in effect we could actually be making it much harder for ourselves. So that's what I thought was, that was one of the ideas in there that I thought was fascinating. What do you think?
I agree. I think this is great, and it kind of goes along the lines of my thinking in terms of keeping things simple. And you're looking for, at least my opinion is, as a trader, you're looking for really simple, robust things that tend to work. And you can use plenty of analogies. You can do a lot of things with a crowbar. You can hammer a nail, you can open a door, you can lift something, you can crack something open, you can, sort of use it as an axe. Lots of things with a crowbar, but there are only a limited number of things that you can do with a power drill, right? And that's kind of, I think, look, I've got a little bit of experience in this area, and I think that I fell into the same trap that a lot of traders do, which is, look, I'm trying to make this trading thing work, and it's not working, so obviously it's very complex and difficult, right? Because we kind of, in our mind, we have this idea that if it's difficult, it must also be complex, which I don't necessarily agree with when it comes to trading, right? I mean, what do you think?
Yeah, definitely. We generally look in the wrong place for the solution, and we think that it's the technical side, because technical side is numbers, and numbers is maths, and maths is intelligent, and so that's going to be the answer, whereas generally the answer is, you need to just stick at your system and be a bit more consistent in how you trade, and not make snap decisions about what's wrong. So definitely it's obviously a natural urge for humans nowadays to look down that route. And as we say, we're trading, the majority usually wrong, so your gut instinct is usually wrong, and you kind of need to, again, step in the way of your decision making. And when you're sort of looking to improve your trading purely through the technical side, then you need to sort of question whether you're just complicating it because you feel that's the right way to go.
Yeah, I definitely did. My mistake was, so I've got a bit of a background in statistics, and so what I decided when I was trading, and this was actually after I'd already discovered some simple naked trading patterns, which are essentially my bread and butter now, but I decided that I wanted to see if I could build like an algorithm, right? And so I got deep into what's called neural networks, which is basically you're setting up this system that just loves data. And so what I was trying to do, what I found out over time, is what you need to do with these systems is you want to predict something kind of smooth, right? Otherwise it'll get really choppy. So I built one for the dollar yen, and what I found out was you weren't supposed to try and predict where the dollar yen would be tomorrow in terms of a closing price or something like that. What you needed to do was predict the moving average, okay? And to really make this work, you really need to predict 2 moving averages, because you kind of want to see the spread between them to see how fast it's going, or if it's going, if it's going to turn around and go up and down. So what I did was I predicted the 10 moving average and the 20 moving average of the dollar yen. And so you can only imagine that I had tons and tons of data to put in, and these are from like the world markets, like Germany and everything you can think of. I would dump in there, and some indicator data as well, just to top it off. But what I found was exactly what Taleb's talking about here. It was interesting because it kind of worked for a while. It was pretty good at predicting what the moving average would be 2 days in advance, but then there would be things that would come up and it wouldn't make sense. Like something would happen where the 20 moving average was predicted to move faster and more violently than the 10 moving average, right? And then I said, okay, this isn't going to work. It was early days, and the thing is, I fell into the trap of thinking that this is something that's difficult to do, so it must be complex. And if I really want to gain an edge here, what I need to do is build this, artificial intelligence style neural network that's going to predict the future for me, that sort of thing. And I really overcomplicated it. And I think you have done a really good job in terms of looking at charts and figuring out, okay, what do I need to do to take a bite out of the profit that's available to me in this market, which is a different way of approaching it than what I was doing back then, which was, okay, how am I going to predict the future? It's like a totally different question, you know what I mean? And I would argue that it's much easier to answer. And I know I'm putting words in your mouth, but it's much easier to answer your question, which maybe that's not how you look at it, but that's how I see your trading, is what can I do to set myself up so that when the market moves, I'm going to take a big chunk of that profit, right?
Yeah, definitely. And the thing is with those complex things, you can always make them work. And that's the trap, is because it's complex and it does work some of the time, you're more compelled to believe in it. And, we go back to this thing about what you believe in is really important. But the problem is they're more susceptible to the unusual event. So, although it can, like you say, win for a while, it needs a small change in what the market's doing for it all to come crashing down. And, yeah, so, what I try and do is say, okay, what's going to work in all market conditions? So if the market stops trending, am I going to get wiped out? Or so I try and sort of build it around what's happening all of the time, rather than just like specific patterns. And that way, I think your system becomes more robust. And I think a lot of the difficulty is deciding how to simplify a system, because it's very easy to say, well, you need to keep it simple, but which elements then do you lose, and which elements do you keep in? Which elements are important? And for that, I think you have to look at the big context, which is my personal opinion, and it's my approach to trading. Again, I'm not saying it works for everyone. I was chatting to a trader this morning, and basically the point I was making to him was, if you use trend and then you either use a wide stop so your win rate is high, or you use a tight stop and let everything run so you always get the big wins, then essentially that is all you need to do. And he came back to me, well, I know 2 very successful traders that use tight stops and small wins, and they do really well. And again, it's that little complex trap where there's a few exceptions, and because it's the hard way to go and someone's achieving success with it, you're more likely to believe it than what's really obvious in front of your face. And that, like I said, this is just my opinion on on trading, and it gets a lot of people's necks up because it is very different to what we usually hear from traders. But if you read any of the Market Wizard books, they've all got their own take on trading, and very few of them follow the same path. So it's my opinion. It's a little bit out there, but for me, that's one way of simplifying it. And I'd say, use trend and think about stop placement, and then how big your wins need to be to make that a profitable scenario. It's very simple. It's my opinion.
What's interesting about that is what you've just described. Your approach is exactly the opposite that you would take when you have a really complex algo that you're working with, because you've really whittled it down here. You say, okay, well, what elements do I need to really focus on here to make this work? Whereas when you've got something complex, and I think Taleb would agree with this, what you essentially have to do is you have to anticipate the weaknesses of it. And so you have to build in, like, it's sort of like building a nuclear reactor, right? You've got this really complex thing, right, that makes energy or harnesses energy and turns it into electricity. And what you're trying to do now is say, okay, now what are the things that can happen that can, cause a meltdown here? And how do we build safeguards in for that, right? Because that's what happens when you build something that's sort of interdependent on itself and really complex, is you've got to anticipate where it's going to fall apart and how to get around that or how to avoid that, right? And that's much different to something that's simple and robust because it has so few moving parts. It's sort of like in its very nature more robust. And so all you're really saying there is, what do I need to, what is the core thing that I need to focus on here, right? Yeah. To make it work. Yeah, it's almost the exact opposite. So in one, you're trying to anticipate the destruction of the system, right? Like what's going to make it come down because it's so fragile. And then the other one, it's trying to just pick the one thing that's going to make it chug along, right? The thing that's going to fuel it. So I find that fascinating. I think that for a lot of traders, it takes time to come to that point. Like, I don't know what your experience was like, Darren, but for me, it sort of really took time for me to come full circle around to the point to where I am today, which is, making it really simple and not adding too many layers or filters over the way that I look at the market. And it wasn't always that way. It was always, before it was always, okay, well, this works pretty good. So if I add this element, if I just add this Bollinger Band here, then I'll be able to filter out these losers and and that sort of thing. And it can get out of hand rather quickly.
Yeah, definitely, Walter. I think what I did personally was, a thing that kind of fascinated me was how come we're all making the same mistakes, and what is the solution to all those mistakes, really? And generally, you had the people who liked the really accurate entries with a tight stop loss, and obviously a lot of those get stopped out, and then when they do get a winner, they closed it early. So they were doing tight stop loss, small win, and then invariably, even if you were good at that, you were kind of ending up break even, and then you had people using a wide stop and then trying to get long runs with that as well, and so then not getting a high win rate. And so it's for me, it was kind of looking at what everyone's doing wrong, and surely that's going to be the answer. It goes back to this idea that 95% or however many it is lose. Well, surely there's something that we're all doing in human nature that's making us lose. And then, okay, so I'm just going to reverse everything and do the opposite of what everyone's telling you to do, and maybe, and that kind of led me down a path. But I mean, essentially, I'm looking to start trading at point A and exit at point B, and as long as there's a difference between those prices, there's opportunity there. It's the way I see it, rather than looking for a particular event to happen and decide, well, now's the time to get in because I know it's going to go to a certain place. So I removed all of that trying to predict what's happening next out of my trading, because that killed me as well. I found it really, really frustrating. I'd get to the end of the day and my head would be pounding if I'd had a bad day, and where did I go wrong? What did I do wrong? The pattern was right and everything was lined up. Why did I lose? And you know, and then the next day the pattern's not quite so good, so not quite to your sort of complex system you have, and then you get out early because you've built up fear because it's not, you know, it's not a perfect entry, and that one goes on to win, and, you know, just get trapped in a circle of, you know, second guessing your own analysis. So, you know, I just find it a lot easier to have, you know, no discretion at all on the entries, really, and take all of that, consider them all to be a guess, if you like, really, and then it's how you manage those ones that survive and where you exit that is the important bit. So in a way, reducing the amount of involvement I have to have. So I'm just using my mind to get, and decisions to get good exits rather than on the entry as well. But yeah, slightly going off course there a little bit as we normally do, but essentially it's trying to simplify the whole process, really, rather than making, you know, the entry, the management and the exit all very complex. I think that's near impossible for a lot of people to do, and I'm not saying there won't be exceptions to that and people who are particularly talented at doing it, but clearly for the majority of people it's a really hard skill to do.
And I think you sort of hit on sort of one of the central keys to it. It's sort of a, you know, Zen-like attitude of it, just let it be. Just sort of let it go. It's not something that you can get attached to because it'll do your head in, right?
Yeah.
It reminds me of this trader that I read about, and I would like to meet him. I believe he is still in Australia. But there was a book called Everyday Traders by Nick Raj, and the interview was, mostly they were stock traders and systems traders, like automated systems traders and things like that. But basically there was one currency trader in the lot, and his name was Scott Barlow. And I thought what he did was fascinating because it's very similar to what you just spoke about, Darren. He said that he manages money, right? And he subscribes to a signal service, okay? And all he does is he takes the signals as they come, and he manages the trades with a 3-to-1 reward to risk ratio. So he doesn't actually pay attention to the exits that are suggested or anything like that. All he does is, in the signal service, he just takes the trades as they are offered to subscribers, and then he sets a 3-to-1, and that's all he does. And those trades will either hit the stop loss and he'll lose 1, or they'll hit the take profit and they'll hit 3. And he said the reason why I do this, the reason why I outsource my decisions, he says, look, it's my job to manage the exit, so I just go 3-to-1, and I never move to break even. He never does any of that. He just lets it go. And he says, I don't want to beat myself up over the decisions, you know, whether to get in or when to get in and which market and all that. So that's why I've outsourced this. And I thought that it was a really interesting way of, you know, sort of psychologically of releasing yourself from that, from beating yourself up, from that guilt or whatever you want to call it that comes with making the wrong decision.
Yeah, and why not? I mean, why wouldn't it work? I imagine whoever's giving out the signals is using some sort of trend, you know, picking pairs that are trending to give like the most likely winners. And yeah, I mean, I've seen data before where random entries make profit as you increase the risk to reward ratio.
Yeah,
the difficulty is, can you do it? You know, can you believe in it? Can you wake up every day and do that and start to want to, you know, think that you somehow are going to be able to pick a better entry. And it's whether you can execute those simple strategies, and that's quite a hard leap to make if you've been down this path where you somehow are going to sort of have a really accurate system. And I think that's kind of a major hurdle for people. But yeah, I find it much easier to believe in systems like that than, you know, many of the ones that I see people using out there.
Yeah, the seduction is in the win rate, isn't it? I mean, the seduction is in... So let me ask you, you've got a simple way of approaching your trades, and how do you convince yourself that what you're doing is right and that it's going to work in the long run? Like, what's the trick for you?
Well, I do a lot of back testing, even when I'm trading live, so on the weekend, perhaps, if I've had a bad week, I'll just kind of pull up some random data and just sort of run a back test and just kind of reinforce in my mind, you know, okay, no, this system works. I just, you know, I've had a bad time, or, you know, I've executed it badly. So I do that. But also I've got my memories of losing as well. I don't know who it was, but someone says enjoy your losses because you're going to learn a lot more from them than you are from your winners. And I completely agree with that. And, you know, I think you kind of get to the end of the line as well, where you've tried a certain approach for a long time and you've beaten yourself up about it, and you've got to the point where you think, this just isn't going to work out for me, and you say, you know, to hell with it. I'm just gonna do the opposite of what I was doing. I'm gonna, you know, and just put the trades on and walk away and forget about them. So I think I kind of got to that point as well many times in my trading. So yeah, I think perseverance as well. It's almost, you know, it's an alien thing really to be able to trade. So, you know, you have to do a lot of looking within yourself to become a good trader, I think.
So what do we do then? If we believe that this is true, that we want to simplify our system and we don't want it to have too many moving parts, we don't want it to be fragile, we want it to be robust. How do we do that? So someone listening here is saying, yeah, sounds good, but I don't know how to do this. What do I do? Where do I start? How do I create something that's anti-fragile?
I think the only technical element that is going to give you a slight edge, in other words, give you a sort of guaranteed more than 50% win rate, is a simple use of trend. So use something very simple to decide what the trend is. You know, a moving average, lower lows, lower swing highs, something simple like that. But make it really simple and non-discretionary. So there's no question if it's above or below the moving average, and then that tells you what the trend is. There's no ifs or buts to that. Nothing else changes it. And that's the first one. And the second one is, I really believe this idea of, even if you want to use a tight stop on your trades, I think an initial wider stop is really beneficial. And by all means move it up after price has moved away. I think what a lot of people like to do, because they think they're removing risk, is they like to use a very tight stop behind the entry. Okay, and then as soon as price moves, they like to move that to secure some win too quickly. Okay, and this is like a fear move. Okay, excellent, I've got a winner, there's no way I'm going to let this become a loser or break even, so I'm going to grab a bit straight away. All the data I've seen says that that's a really bad thing to do. By all means, start with a wider stop, and when price has moved in your way, reduce your stop. Okay, but I think people are just a little bit too tight when they first enter, and a little bit too quick to move the stop up, and that basically makes your job a lot harder. If you do want to use a tight stop, I think you need to then accept that your exit needs to be larger than, say, you know, a 1-to-1 or a 2-to-1 risk to reward. To really give you an advantage on the money management side, you want to let your trades run, and a few big wins will make up for all those stops that get hit. My personal preference is to use a wider stop, and then basically make my judgment when I see how price has moved away. So if I start with a wide stop and price moves, you know, dramatically away, and the trend continues strongly, then, you know, I'm going to let it run longer. So I'm using a judgment call then. I'm looking at it, there is a trend, it's moving strongly in that direction, no news has come out to counteract that, so I'm going to let it run. Or if I've entered initially with a wide stop, and it looks like the trend's kind of faltering and it's doing double bottom, triple bottom, whatever, and price is kind of stalling, then I'll take the small win. So I'm kind of ensuring a high win rate, but I'm also giving myself an opportunity to get the bigger wins as well. So it's kind of like the best of both worlds, really.
Right.
Yeah, and for entry, a lot of people ask me about, you know, specific entry types. Just you know, use something simple and repetitive, and use something that's going to give you a decent frequency of trades. If you've got too few trades, I think it's really hard to maintain a system. You've got to have a very strong will to only take a few trades a month. And I notice, you know, when you because you trade much higher time frames, don't you?
I think so.
Yeah, but you then look at many more instruments to find your So that raises your frequency. So, you know, a lot of people ask you, how many instruments do you trade and what time frame? And really, that element, you're kind of looking for a decent amount of frequency. So you give yourself, you know, a decent probability of having some winning trades. If you take one trade a month, you kind of, you know, you've got very few opportunities. So that's my personal view, but it's certainly not the only way to do it. But for me, that's it.
Yeah.
Simplifying it.
Yeah, that's interesting. I heard about this guy who traded. He did well, not the opposite, but he did this thing where he would just pick. I think he actually automated it. And so what happened was the system would take these trades, and it would lose like 98% of the time. And it would just try and pick these turning points, and he would have a really, really tight stop, like a few pips. And he would, of course, get stopped out almost all the time. But once in a while, he'd hook into one that would just go, and it would just leave it open. Like he wouldn't really, I mean, he would close the trade eventually, but it was sort of like trying to pick a 16-week trend on the 5-minute chart or something like that, you know? Yeah. And of course, he failed miserably most of the time, but once in a while, he'd hook into these with, 2 pip stops or 3 pip stops or something like that, and it would just go and go and go, and it would cover all of his previous losses. But I don't think that's necessarily one that most people could do. I think an easier one would be to look at the line chart. So if I were a trader and I wanted to simplify things, what I might do is probably somewhat similar to what you do, where I'm not sure, but you would say, okay, look, the euro's going down, right? So I want to sell the euro dollar, and I see that it's making lower lows and lower highs on the line chart. So what I'm going to do is wait for it to swing and go up and go against the trend, and then as soon as it makes one of those nice bends back down in the direction of the trend, I'll just get in there. And so you could just do something like that, where you keep stacking those. Whenever you see a trending market make a turn, you just assume that it's going to keep going lower and lower and lower. And same thing with bullish trends. You just assume that when it makes that, and you could stack those on, and that would be a really simple way, and it probably would fit with what you're talking about with a wider stop. My interest, though, is when you say it's a judgment call about about how far you let it go. Like, how do you know? Is it just based on sheer velocity? So you see, it seems to be going really strong in my direction, so you kind of assume it's going to keep going further. Is that how it? You mentioned that you don't want to hear any news that's counter to the trend and things like that. But I think a lot of people might be listening to that, Darren, and saying, "Oh, I don't know, that sounds a bit iffy."
But I really think that's the way to do it. You kind of have to. You have to look at like the real big picture and the context. So, let's say it's been stinking for you for ages, okay, and you finally got a nice runner and a big decent win. You might decide, right, well, I really need to cover my losses here and take a little bit of profit and, get back on it's been a, nasty rangy period, and this is going to get me out with a small bit of profit. So in this context, okay, I'm going to call it a day and close it. But let's say, for instance, 2 of your pairs have not been doing great, but the other 2 are in a really nice trend, and you've got 2 big wins going. Well, in that case, you might say, well, you know what, I'm going to take half the profit off that one. I'm going to let the rest of it run, because this. So you've got to I think, a lot of being a trader is making good judgment calls. And if you're going to say, well, I'm not going to use judgment calls at all in my trading, then are you basically saying that I'm not going to be a good trader? I think you think about anything else you do in your life that you're good at, okay? So I am particularly good at cooking, okay? So, I can chuck a sea bass in the oven, I can pull it out, I can touch it with my finger and tell you if it's cooked perfectly or overcooked or undercooked, with an instant. And there's nothing that's telling me that other than good judgment. And I think the same thing must come into trading. Surely you must be able to sort of judge your, same if you run a business, you kind of, you get particularly good at judging, you know, what stock to buy and how to staff certain events, and you know, these are kind of skills that you haven't got any specific measurements that are giving you the whole answer, but you're using you know, a bit of your judgment and experience as well. So I think experience kind of comes into it a little bit. You know, that's kind of how I see it, really. And I think a lot of people seem to think that they can draw a line on the chart and be more accurate, and I question that massively. You know, you can pick some good areas to get out, but how many times have you picked that, you know, weekly support, and it sits on it for 2 days, and then bosh, drops through another 300 pips. But you know, I think people believe what they want to believe. You know, so if they use support and resistance, for example, you know, they believe in that, and you know, it's not right for everyone, but I kind of, for me, it feels comfortable because there's no right or wrong. You know, I can't beat myself up if I take an exit and price drops again, because you know, you're going to be wrong sometimes. You can't predict. What does help though is have a system where you can re-enter, you know, which is something that I get from using breakout. So if I do exit and then it looks like the trend's continuing, I've got a valid entry to step back into the trend. So yeah, maybe a bit vague, but it works for me. And I think, you know, when a lot of traders sort of play with this idea, it's not as mad as it sounds.
Yeah, and I think one of the things that's coming through, just to sort of wrap up from my end, is I think the experience that you get is really what's going to help you. And I believe that it doesn't really matter, even if you're trading a completely different, you know, even if it's a more complex system, having that experience in the markets and seeing the markets, and you know, sort of banking that experience and seeing that chart, having those all in your mental file is really helpful. So I would encourage people to, you know, I knew a trader who would just load up Forex Tester and he would just let it run and just watch it like a movie. So he wasn't actually trading, because most traders, of course, when they're back testing, they actually take trades and make decisions and pull the numbers out of there and look at their data and all that. But he was actually just watching it in terms of, let me just see what happens here, and trying to experience the market. And I think there's something to be said for that. So if I were a trader and I were thinking about simplifying my approach to the markets in the hopes of perhaps doing better, what I would say is definitely try and get more experience, and you can manufacture that by looking at the older charts, by using Forex Tester, by doing things as if you were trading back historically. It doesn't really mean that you're going to see the exact same thing in the future, but what it means is you will have more of those experiences in the bank. I'd also seriously look at systems like how Darren trades, which is basically to look for really simple reasons to get into the market, right? Really simple. And in that way, what you might do is find one that resonates with you, that makes sense to you and fits your beliefs of the market, as we all trade our beliefs, and then you can stick with that over the long haul. So yeah, that's my basic takeaway from today. What about you, Darren?
Yeah, likewise, really. Just think about, if you're struggling trading, just think about what elements you could perhaps remove from your trading, what elements are really important, and perhaps try something just a lot simpler for a while, and see if that makes a difference.
Thanks for your time, Darren. We'll see you next time, and until then, happy trading.
Yeah, cheers, Walter. Goodbye.
See ya. Bye.